Welcome to Phillip Futures Market Watch. My name is Joyce Liu, Investment Analyst with Phillip Futures. Today, we will put our focus on raw sugar number 11 futures. Front-month raw futures have been trading in a falling wedge pattern since February 2011. Typically, a falling wedge is a price reversal pattern that portends a strong bull rally, and this may prove to be a good trading opportunity for investors. Looking at the historical prices of sugar, it has been trading in a clear downward trend since early 2011, making lower highs and lower lows over the course of 2 years. The main reason why sugar prices had halved since its peak in February 2011 is the increase in production across major sugar-producing countries, which resulted in a huge production surplus in marketing year 2011-12. Global production surplus over human domestic consumption in marketing year 2011-12 is 12.7 million metric tons, 5 times more than the 30-year average of 2.6 million metric tons, and in marketing year 2012-13 is expected to stand at 9.5 million metric tons. A major part of the surplus this year is expected to come from the largest producer, Brazil. However, this may not come true as current changes in Brazilian ethanol policies and exchange rates point to a potential reduction in sugar production. In Brazil, sugar is produced from sugarcane, and sugarcane can also be fermented into ethanol to power vehicles. Because most sugarcane crushing plants have the capability to crush sugarcane into both sugar and ethanol, changes in sugar market have both resulted in as well as resulted from changes in ethanol policies. For example, in year 2010, when sugar prices in the international market made sugar more attractive to produce than ethanol, it resulted in a sudden supply shortage and surge in prices for ethanol fuel. In reaction, the Brazilian government reduced the minimum ethanol blend from 25% to 20% in 2011. Now on January 30th this year, Brazil's energy minister announced that the minimum proportion of ethanol blend to gasoline will be increased from 20% back to 25% by May 1st this year. This will certainly lift production for ethanol in order to satisfy the demand for it. 1 month later, by the first week of March, ethanol prices rose above the value of sugar for the first time in 2 years, making it more attractive for sugarcane crushers to produce ethanol instead of sugar. At the same time, Bloomberg reported that 2 officials in the know said that the Brazilian government is preparing for ethanol tax breaks that are aimed at channeling more of the country's sugarcane into ethanol production. Implementation of the changes is expected to be announced before the sugarcane crushing season starts in late April. Recent changes in the real-dollar exchange rate also act in favor of domestically consumed and real-priced ethanol fuel as compared to internationally traded and dollar-priced sugar. The Brazilian real lost almost 30% of its value against the US dollar from July 2011 to December 2012, but the trend reversed early this year. The real appreciated 9% against the dollar and is likely to stabilize around the range of 0.5 to 0.513 dollar per real. An appreciation in real makes real-priced ethanol more attractive. In summary, the strong fundamental demand for ethanol looks set to shift the sugar-ethanol crush ratio in Brazil towards ethanol, which results in less than forecasted sugar output. This is likely to be a relief to the pressure on sugar prices, which is due to current expectations of large global surplus. Back to our technical chart, the descending wedge pattern is a strong bullish signal if and when sugar prices breaks out of it. With prices now trading in a very narrow range and the MACD line crossing above both the signal line and zero line, there is a strong case for a sustained bull rally in sugar prices, and a clean break below 17.54 cents per pound will invalidate our bullish call. For more information on the risks and returns of investing in sugar and sugar futures, please approach any representative from Phillip Futures for further discussion. Thank you, and please stay tuned for more Market Watch videos.